We have a lot of people registered for this webinar, so we're just going to give it another minute. I see people are getting on right now as we speak. So just one more minute and we'll go ahead and get started here. Thank you so much for your patience. Thank you for being on time. It means a lot. All right, good morning or good afternoon, depending on where you are in the country. My name is Josh Elohim with Back9 Insurance. I'll be your co-presenter today. We also have Travis Bertini on the call here as well, who'll be doing the meat of the call regarding Kaizen. We're truly excited about this webinar. Kaizen is very unique and it's a very interesting program. I thank you so much for being on the call. Just some quick housekeeping. For the purposes to make this smooth, everyone's going to be muted. We will go through the presentation. We will set up a Q&A at the end so you can ask your questions. I'll try to answer as many as I can. Reach out to your marketing manager if you have questions. There'll also be some PDFs that your marketing managers have right now that they can send to you. We'll go over that through the entire presentation. So again, we're truly excited to do this webinar today. Just so you all know, if for some reason you don't have a Back9 account, if you're not signed up with Back9 at all, you can go into the chat box. There's a place where you can set up your account and you can take advantage of Quote and Apply and the BOSS system, our technology. So just go into the chat there, go ahead and sign up. And again, truly excited to have you, Travis. Kaizen program, take it away.
Thanks, Josh. And we're pretty excited about this relationship with Back9. So as Josh said, if you haven't, contracted or gotten set up with them, I would highly recommend it. This relationship that we have now with Back9 is really exciting because both NIW and Back9 feels very strongly about the direction that we're heading in regards to utilizing technology in a way to not only present and sell to our clients, but to allow them to buy insurance, process insurance in an electronic format where we can provide solutions for our client in a virtual world. It's probably more important than ever, ultimately, to be able to talk and convey sales concepts to our clients where they can't meet us in our homes or in our offices, or they won't let us in their homes because of what's going on with COVID. It's more important than ever. So it's a very, very exciting relationship with Back9, who is already so technologically savvy in regards to how they're doing business. So thank you, Josh, and the leadership team over there at Back9. Back9 has become a preferred vendor with NIW, and we'll talk about what those benefits are. But it's going to give you access to technology that only a handful of advisors across the country have access to. And we're going to give you a sneak peek of what this ILIA system is. But what Josh and I talked about is we want to give everyone another quick overview about Kaizen, because there's a lot of people maybe on the call today that don't know what Kaizen is and where the opportunity lies. So we're going to kind of talk high level and go over some of the key features of the Kaizen program. But then most excitingly is that we're going to discuss today is how do I present and sell and have my client enroll into this great program. So that's what we're going to discuss over the next 45 minutes to an hour. So thank you for joining us, and we will definitely open it up for Q&A at the tail end. So Kaizen, who qualifies for Kaizen? What kind of clients are you looking for? Where's the opportunity lie? The opportunity lies here from an individual standpoint for ages between 18 and 65. Most of our clients in the Kaizen program are about 35 to 55 years old. That's probably where your biggest bulk of clients are going to be from that age range. And we're looking for clients, or you're looking for clients that have the income potential or are earning about $200,000 a year. They're in good health and they're able to make 5 premium payments. So from a qualification standpoint, that's the criteria that you'll be looking for people that will really be interested in this program for the benefits it provides. Typically speaking, this was a $1.5 million death benefit minimum. But because Back9 is preferred, right now our minimum premiums have been reduced by quite a bit, allowing a larger demographic of clients to be introduced to this kind of premium finance program where again, it used to be a $1.5 million minimum. We have specifically allowed that minimum premium to be lower for preferred partners. So again, it just widened the opportunity that Kaizen provides, that can provide for your clients. So who is your actual target market for this premium financing opportunity or this hybrid financing opportunity? Well, you're looking for highly skilled individuals starting late in life, maybe saving late in life. About 30% or so of our clients are doctors, physicians, partly because they're just out of those student loans and they're starting to save in their early 40s, mid 40s. Individuals that are already maxing out their 401k, they're looking for a place to save additional dollars outside of the traditional qualified plan. People that are already in high tax brackets, individuals that are already kind of complaining about the 33 to 39% tax brackets they're in. Those are the individuals that are going to be in higher tax brackets, most likely in retirement. So you're helping them find some ease in regards to taxation in the future. So the primary client are going to be doctors, dentists, financial services, small business owners, technology engineers. These are all the individuals that are in that high income earning platform arena. They don't have a large net worth to speak of, but they absolutely can afford this, and they're looking for other places to save their money. So what makes Kaizen so different? Well, from an IUL perspective, every one of you have the same products you're offering the clients, kind of the same choices when it comes to an overfunded indexed universal life solution or a max funded indexed universal life solution. But the only difference between that and our program is that you now, selling Kaizen, have the opportunity to bring more money to the plan to pay for it. See, the rest of the advisors out there selling the max funded plans ultimately require the client to reduce their lifestyle to make sure that they're saving enough to cover future lifestyle, right? And that's a tough sale. It's very tough to get clients to stomach the amount of money that they actually need to save to create a nest egg or a lifestyle in the future that they actually desire. See, Kaizen lets your client continue the current lifestyle that they're on, but you're bringing extra money to the plan, ultimately to increase the distribution at which they can enjoy off of a life insurance plan. Kaizen addresses one of the biggest fears that Americans face today, and that is the inability to retire comfortably. See, everyone's going to retire. The question is how and how comfortably will it be? We know that Americans are some of the worst savers in the developed world. The average American is saving only about 4.9% of their annual income a year, which is really insufficient for the lifestyle at which they're leading today. And most financial advisors or insurance agents know or are saying that you need to be saving at least a third of your income to maintain your lifestyle and retirement. See, that's the key point, right? No one wants to reduce their lifestyle and no one wants to work longer. So they have to save more or they have to take more risk. How many of our clients have 10 times their annual savings in retirement? We know statistically there's very few Americans are prepared for what is that daunting 23 to 25 years that they'll be in retirement. And here's some statistics that a lot of you may or may not know. About the top 10% income earners in the United States are making about $160,000 or more a year. So the people that qualify for Kaizen, there's about 6 to 6.5 million households in the United States that fall into this range, right? But here's what's interesting. What we know about their retirement accounts based off of the IRS database is that they're only saving about a fourth of what they need. So I don't know about you, but that's a huge opportunity to have a conversation with a client that is itching in the back of their head. They know they're not saving enough. They're just not quite sure how to get there. And I'm going to repeat this again. There's only a couple options to deal with this particular situation of not saving enough, which is save more, which no one wants to do, take far more risk in the market, which everyone's very skeptical of that right now, clearly. They might have to work longer, which absolutely no one really wants to do, or they have to reduce their lifestyle so dramatically that time in retirement is just not a really desirable one. So what's the only option they have? Well, the only option they have is possibly the Kaizen solution, because this is the plan that actually puts more money into the plan. See, we've taken what is the key problem with what Americans are facing, and we decided to focus on what really mattered. This is what principle says. 74% of your income in retirement is driven by how much you save, and only 26% is a result of your investment returns and asset allocation. Why is everyone focused on the 26% and not the 74? You think about that. Where is all your clients' focus, or where has it been in the past 12 years? Really on the rate of return that I can get in my account. For some people, they've been saving less because they've been quote unquote earning more. But the reality is it's how much you save or how much you're putting away, not the earning. And that's where Kaizen is focused. When I saw that statement for the first time, I thought, my God, that is what Kaizen provides for the client. We're focusing on the 74% that really matters. Yes, we do need rate of return. Yes, we believe IUL, based off of all of the data that's we have, can provide very good rates of return, but we're focusing on how much money is in the plan, and that's giving us the ultimate results. So why does this leverage work? It works because there's more money. Or why does this rate of return work, and why does it provide more benefits? Because we have more going into the plan, more working for us, more money in retirement, as well as living benefits and death benefit. And for high income earners, unlimited contributions are very important when they're already maxing out or contributing to plans that have contribution limits. As long as they qualify, they can put as much as they want in one of these plans. And think about Kaizen as a matched program. So many of our clients are used to getting a 401k match, but what if you could bring a solution for every dollar that they contributed to the plan, you have a lender that will give them additional $3. See, that's a huge sale opportunity right there, where you're providing a lender to contribute to their benefit program. Well, how does that work? And then on top of it, you're giving that leverage to them at incredibly low borrowing rates. Right now, 1-year LIBOR plus 175 is about 2.75%. Historical low borrowing rates to access this smart leverage to increase benefits that they couldn't otherwise get on their own. So how does this work? What does it look like? And structurally, how does this work from an illustration standpoint? Well, this is an example of a 45-year-old male putting in about $34,850 a year into a plan for 5 years. The lender is matching about $26,000 a year with your client's contribution those first 5 years, and then picks up the full guideline annual premiums years 6 through 10. So the lender's putting in about $434,000, while the participant or the client is putting in $174,000 of their own dollars. So what does this look like structurally over the next 15, 20, or even out to life expectancy? Well, again, the client puts in their 25% of their premiums in the first 5 years, which of course is matched by the lender, and that's covering things like cost of insurance, fees, expenses, and charges, and which also that first 25% is kind of like the down payment for the rest of the lending. It secures the cash values for the lender to continue lending to the plan for those additional 5 years. After those 10 years of premiums are paid, 5 from the client and ultimately 10 from the bank, we let the policy sit for an additional 5 years. So this is a 15-year hold and wait plan So make sure that you're letting your client know that it takes about 15 years to be able to exit the loan via a policy loan, where you take a loan against the life insurance policy, pay it back to the lender. This now releases the plan from the trust at which it's owned by and the collateral assignment to that lender, and the client can start taking tax-free distributions as early as year 16, or in this example, age 65 to 90, which gives the client about $81,000 of tax-free income. Now, this is a structure that most of you guys are doing now. This is an option B, again, max funded right below the MEC limit or up to the MEC limit. We switch it from option B to option A in year 10. We let it grow to have enough cash value to pay back that lender, and then your client can enjoy those tax-free distributions in retirement. So let's just take a quick glance at what this illustration looks like so you understand what is being said in the ledger. You can use this ledger as a part of your presentation. More importantly, at the end of this webinar, you're going to see an actual online illustration or sales presentation that you'll be able to invite clients to. But what is Kaizen? It just explains why the traditional retirement plans are really insufficient. But most importantly, this particular program protects you and your family not only from a death benefit, but death benefit features, living benefits, and of course that cash value. It goes into what that leverage looks like, how that cash accumulation feature works along with the protection feature, and then what those combination of contributions that your client's putting into the plan, as well as what the bank's contributing to the plan. It's laid out perfectly here on page 3 of the illustration. On page 4, what we're doing is explaining what your contribution would look like in a after-tax investment. That might be a mutual fund or some kind of a bonus program where you're paying taxes and then investing it and taking that distribution in retirement in an after-tax investment. What would your income look like if you were to put that same $34,000 into a self-funded IUL? This is the stuff that's being sold by you and other advisors right now. And then, of course, what does the income look like and death benefit when you just add that leverage to the plan? You can see that there's a huge difference in total distribution and death benefit just by adding the Kaizen leverage. And what's more important is that your client's not doing or doesn't have to qualify for anything more than what they would normally qualify in a self-funded plan. And that's what makes Kaizen so exciting and different. Now, what every one of you want to understand is that NIW goes to great extents to make sure that you and your client can have confidence in the plan. And what do I mean by confidence? You should know that every one of these plans go through 2 major stress test environments to even get approved on the platform. What are those stress tests? One is the Great Depression stress test. Most of your clients are going to ask you, whether you're using financing or not, what happens when I get multiple zeros in my IUL? How will that affect my plan? Will it decrease my benefits? And of course it would. But from a financing perspective, what you really want to know is how would a Great Depression scenario affect my plan in regards to paying the loan back? You know, what if my policy doesn't perform? What benefits will I get? Well, in a Great Depression scenario, we assume some things in here that most people never even think about putting in an IUL design. We've put in 9 zeros in a 15-year period, assuming an 11.25% cap. A lot of the statistics came from our actuaries at our carrier partners, that we were able to pay the lender back and interest in year 15, and we were still able to get $49,000 out of the plan at age 65. So think about this, 9 zeros in a 15-year period. We were able to exit the loan, pay the lender back, hold on to the policy to age 65, and still get $49,000 of tax-free income. Now, if you look at the screen here, 81 is, yes, what we projected. Self-funded is 36, using no leverage. At 49,000, we're still better off utilizing leverage in a Great Depression scenario than by self-funding the plan. And yesterday I was on a call and someone said, well, what if that same Great Depression scenario happened on a 5-pay? And the likelihood is that the policy would lapse. The reason why Kaizen survives these economic environments is it's unemotional. We're going to fund this plan for 10 years regardless. So the additional premiums in the plan are why the plan can succeed in those various economic times. The second one is the high interest environment of the 80s. A lot of people are going to say, well, what happens when interest rates go up? Isn't that going to affect the cost of the loan? And of course it will. But what you need to remember is that those the fixed rates and the bond yields are what are driving cap rates today. About 13 years ago when I started in this business, I was running IUL with a lot of caps at the carriers were 16, 17%. And the reason that they were so high is that their general bond portfolios allowed the carriers to buy options that gave you those really, really attractive cap rates. So ultimately what's happened is those bond portfolios have shrunk. General funds have gotten a little bit smaller. Their ability to buy caps have decreased those rates. So what if we had an IUL in the 80s when the Fed fund rate was in the double-digit range, but we also knew that 30-year bonds allowed insurance companies back in the 80s to give you fixed rates of 12 and 13%. Well, if you think about that, if a carrier could give you 13% back in 1983, 84, what would the cap rate have to be for someone to use an IUL versus a fixed rate? Well, it would have to be extremely high, 20% or even higher. So what the carriers told us is, look, in some years, it might have been even uncapped during that mid to late 80s timeframe. So if that's the case, what we said is fine. We understand that a good insurance company will raise those caps, but we're going to only raise them to 15%. We're going to wait 4 years to raise caps, and that's going to be our stressed environment. So as you can see here, in a stressed environment of a high interest rate and time frame, we could still pay the lender back plus interest in year 15. And if we hold on to the policy to age 65, we can get about $65,000 of income out of the plan. Yes, not 81, but much more than 36. So there's a real high likelihood of success in the design that we've created with Kaizen. And we stressed these environments because these are ultimately the worst environments that we could actually stress against here in the United States. So what does the illustration look like? What can you be prepared for in regards to the conversation on the ledger itself? Well, the ledger, every one of our ledgers has the client's name, the age, the illustrated rate class, the bank margin, and the death benefit. And what do you need to know based off of this? With a national life policy, we're using their high cap strategy with their Enhancer Plus rider. With Allianz and Minnesota Life, there's various strategies that we utilize with them as well. We're not going to get into that today, but just understand this is kind of how it's laid out. And most importantly, from a I would say conservative approach from an income standpoint, all of our plans are built in with a 20% reduction in income. So we aren't showing the max illustrated income rate that the software will give us. We're actually taking that number and reducing it by 20% to deal with this various sequence of returns and things that can happen with an IUL as we own it for the next 15, 20, 30 years. So what is the illustration projection, or what does the ledger look like? What do these columns mean? Let's just go over those columns really quick. Column A is the interest rate plus the LIBOR plus the spread. This is an older illustration, so it's showing a little bit higher interest rates right now. That would be about 2.75%. The column B's are the total premiums going into the plan, and then the next column there is the client's premium out of pocket that they're required to pay. And then column C is what the bank is lending us. Now, what you see in column D is that's the loan plus interest rolled up into year 15. And then column E is just the loan plus interest rolling up until that point of exit. Now, Here's where I really want to focus your attention on. Column F and G. What this policy utilizes is what's called an early cash value rider or a balance sheet benefit rider, depending on the carrier. These policies have a high level of liquidity. And the reason that the lender can put this plan in place the way that we do and utilize the policy as the sole collateral for Kaizen is that there's enough cash value to always be able to pay the lender back in any circumstance. So we've designed this so that the liquidity is so high that the lender doesn't require you, your client, to actually post any personal guarantees or financial guarantees for the lending. It's a key point about Kaizen. Your client isn't borrowing the money, nor are they posting collateral. And I'll go into why they're not borrowing it, but the policy is the sole collateral for Kaizen. So what happens is that the policy premium is $60,179, as you can see. The client's putting in $34,850, and then of course the lending is $26,679 in that first year. You notice that there's $51,000 of cash value in the first year. If something ever happened to this client and they wanted to walk away from the plan, there's enough cash value to pay back the $28,000 loan, and the client, as you can see in column H, would have about $23,000 of their $34,000 contributed. So there's a lot of liquidity in this plan. Now, if the client passes away in any one of those years, there's always clearly enough death benefit to pay the lender back first, and then the beneficiaries would receive whatever was left in the death benefit back to the trust after that lender was paid back. Now, we hope that we don't die or walk away from this plan, and we go all the way to year 15, as you can see in column D, at which we take a policy loan against the contract, we pay the lender back, and then we start taking those tax-free distributions in either year 16 or, and from our illustration standpoint, age 65 to 90. So that's the structure of the plan. It's not real complicated, but what you want to know, you will notice that there's a big death benefit drop in year 10. Well, what that is the option B to option A material change. We do a base reduction to lower the cost of insurance in that year, so that we can effectively exit the loan in year 15. If your client sees that big dip in death benefit and they're concerned about that, just make sure that you offer them the life insurance coverage they need, whether that's GUL or term, as this is really focused on a income play or income solve, which is why we're having to reduce that death benefit as much as we are in year 10. So does this all sound too good to be true? It shouldn't. We know that life insurance, if it's designed properly, if we properly fund the plan, if we design it with the minimum costs, which all of our plans do, it's not too good to be true. The banks are very confident in this program because we optimize it for growth. We take all of the costs out of it. We stress test it, as I just discussed, for two of the harshest economic environments in the US. We do annual servicing, which I'll show you a clip of that. Extremely high persistency rate. We have about a 98% persistency rate, which is extremely high from an industry standpoint. We've been doing business for over almost exactly 20 years this year, and we've facilitated well over $5 billion of loans with our lenders. And so there's just a high level of confidence in this particular plan. So you have to remember though, no loan documents, no personal guarantees, no credit checks, and no financial underwriting for this program. How do we do that from the standpoint of borrowing the money? Well, your client's not borrowing the money. We have a arrangement with the second largest trust company in the United States, and we have what are called tranches. We tranche millions of dollars and hundreds of clients every single year into these 6 master tranches that we do on an annual basis. And so really what's happening is this trust, this master trust arrangement, is the borrower of the money. Dave, Paul, Brian, and Scott here in this example are not borrowing the money. They're just putting a living trust in force with Kaizen, and they are having their personal policies owned by that living trust, at which they fund on an annual basis. When their premiums go into the trust and are put in the master trust, the bank matches those premiums. So we're pooling millions of dollars a year to give us the pricing and the bulk pricing that we need to make this financing program work. Now, the great thing about this structure is that Paul, Dave, Brian, and Scott are not personally attached to the loan. They're not borrowing the money. They have no relationship with the lender. They're just qualifying based off of their annual income and their ability to pay those 5 annual premiums. The lender feels confident in that structure enough to lend 75% of those dollars to that master trust. But in the meantime, the master trust will hold those policies in first collateral assignment if something happens. So for instance, if Dave needs to walk away from the plan, Dave's cash values would be accessed by the master trust. It'll pay the lender back, and Dave can walk away with his policy, or he can surrender his policy. Now, if Dave passes away, the death benefit, a portion of that death benefit would pay the bank or lender back, and then Dave's beneficiary of his trust would get the rest of the life insurance. So it's a protection to the lender to make sure that its money is protected inside of that policy and in that trust. But it's also a protection to Dave, Paul, Brian, and Scott and the other trust holders, that they're not personally responsible to pay that lender back. The only access to those dollars is through cash value and death benefit. So it's a really amazing program, because most people that qualify for Kaizen don't want to take personal loans or put their personal credit on the line or personally finance for this kind of leverage, especially individuals that are making $200,000 to $300,000 a year. They might have just bought their first home. They're buying cars. They're saving money for college. They're doing all kinds of stuff for their families. And the last thing they're thinking about is taking out a loan for their benefits or their life insurance plan. That is the key difference with Kaizen, and why so many clients are excited about this program versus the others out there that are not. That it's not that they're bad in any way. It's just that other programs out in the industry today require the client to borrow the money personally, and very few people in this demographic are interested in that proposition. Now, the other reason that there's a lot of confidence in the plan from a lender's perspective, and I hope you as an advisor, is that we do annual servicing on all of our cases. So for the next 15 years, NIW, 70% of our staff at NIW is focused on servicing the client. Premium financing requires a lot of hand-holding and years of servicing to make sure that the lender gets paid back and the client is happy. So what we do is we service that plan every single year until the lender gets paid back. This is an example of Grace Bernard's policy, who was in the very first tranche of Kaizen. And you can see that right now she's averaged a little over 8.7% in her crediting rate. She's had about a 3.52% loan rate, and she's had a spread on that borrowed money versus what her IUL performed at of a little over 5.2%. So that's what we will provide you and the client, again, every year until that lender gets paid back. Now, we work with 3 of the major carriers in the country. All 3 of these companies participate in the Kaizen program. So if you don't have these contracts with Back 9, please get with your marketer and get one of your contracts with them so that you can have access to the Kaizen program. And more importantly, just in a few minutes, the ILIA program, which we're going to review here momentarily. So this is where the exciting part is. We've had Kaizen's been around for 7 years. Most of you on the call, I would even imagine, you've heard of Kaizen before. I've done 2 webinars for Back 9, and Kaizen has been, like I said, in the industry and has been a buzzword for many years now. But you know, the traditional way of selling was, let's get an illustration, let's take out a PowerPoint, and let's present to the client. And we know that that environment has changed dramatically. Trying to get a client in your office Utilizing or emailing illustrations is sometimes, in many cases, very ineffective. So what we did is created the Interactive Learning Information Assistant. This system will allow you to be able to present and invite your client to learn about Kaizen on their own time in the comfort of their own home. And if they're ready to purchase, they can purchase right here in the system. Now, I know that your affiliation with Back9, and why that you have affiliated with them, is because they have really forged the technology forward in regards to doing business in an environment where the life insurance industry was almost 100% paper, right? And all to exhausting amounts of paperwork. Back9 has allowed you to let your client do this almost 100% electronically. Well, that's why this partnership is so exciting. Kaizen, the ILIA system, is now a 100% electronic presentation platform, as well as a application and processing platform. So Josh, can you see my screen right now?
Yes.
Perfect. Okay, cool. I'm going to log in and I'm going to give you guys an experience of what it will be like to have access to ILIA. Really kind of high level, but what I want you guys to do is see the opportunity. Ask yourself if you think this is something that you want to implement into your practice, if you want access to this because you have clients that you would like to invite. That's what we're going to spend the next 15-20 minutes on. And then, of course, we'll conclude with any Q&A that you might have. So this is the ILIA platform. If you become a preferred advisor with Back9 and NIW, you will get an invitation to log into this particular site where you'll be able to have what's called an agent portal. Now, this portal ultimately is going to allow you to access Kaizen materials. There's a lot of training on here. This is where you'll be able to demo the site for your clients. And this is also where you'll be able to create invitations to send to your clients. This system allows you to customize the program so that it can be more a co-branded opportunity for you to co-brand your brand with Kaizen. It's going to have you can upload your picture, your company logo, so that you can ultimately, when your client opens it, they can see who you are, and they have a way to communicate with you through this system. So we've really created this as a co-branding opportunity for you and NIW. The most exciting part of this is creating an invitation. Instead of sending an illustration or a PowerPoint presentation, you'll be able to go into the system, invite an individual to the Kaizen program, choose the underwriting type based off of the offer you're given by the carrier. Most of it's going to be fully underwritten, and then be able to enter simple information about the client and then ultimately send an invitation to that client. Now, here's where the exciting part is. How many of you have sent emails and never heard a response or didn't know if it ever ended up in their inbox? Well, with the ILIA system, your status allows you to see, yes, my client was invited. Yes, my client opened the email. And then actually from there, we hope that they create their account. So you as an advisor can know the steps that they're in that sales cycle, which is something that most of us have never been able to experience without a lot of follow-up. Now, I will say that you absolutely should follow up, but this lets you kind of know where they're at in the process. If they didn't open the email, you can call them and ask them if they've received it. You can assist them through logging in, and then of course, creating the account. Now, once they've created the account, that puts them into the ILIA system. Now, what's that ILIA system look like and what's that experience? Well, if you choose not to invite your client, but choose to demo the system first for them, we've created the site in here where you can click on this radio button and click on demo. Now, in this demo site, you and the client will be able to watch the introductory Kaizen video. That's embedded in the system as soon as they log in. Now, what you'll also notice is that there's our logo here. This is where you as an agent, your logo is going to show up if you upload it. So I'll say Kaizen, sponsored by and then of course your brand. So you can, again, brand this as soon as you get access to it. After the client watches the video, you can go to the Estimate My Benefits. Now, this is probably one of the most exciting parts of this program, at least for me, because, you know, how many times have you said, I need a $40,000, $50,000, $60,000 illustration, and I need the income. I want to show the income at those various contribution amounts. Well, this system has done away with those illustrations and allows the client to customize their benefits on the fly. So as you can see here, I can change the age, the gender, the health rate, my contribution amount, and right on the fly, the client has the ability to see what the initial death benefit is, the annual distribution from 65 to 90, the total distributions over that period of time, the internal rate of return on my contributions versus my distributions and death benefit at age 90. So this is a snapshot of basically really all the client really wants to know, right? I mean, in many cases, we kind of throw illustrations at our clients like it's something that they will understand and actually want to see. In reality, they want to know what the benefits are. And those ledgers can be very complicated. So what we've done is created an estimator based off of the carrier of choice, Allianz or National Life, to provide you with an estimated benefit based off of the criteria. Now, what's also great in here is that we did a comparison model. A lot of people want to know, well, what is my $40,000? What would it look like in a tax-deferred investment versus an after-tax investment? Versus what if I just put $40,000 as if I pay in an IUL? And then most importantly, and what we're trying to get across is the increased benefit by utilizing the Kaizen leverage. And if you want to go from a more like, you know, numbers view to a graph view, we have a graph view here showing them ultimately those benefits in a bar graph view. And inside this estimator, they can make those contribution changes right on the fly inside the system, change the list view, or just go back to the standard Estimate My Benefits view. So this gives the client the ability to dial in the distribution that makes sense for them. None of us ever really know how much they can truly afford. What we've seen is that clients are upselling themselves based on seeing what that annual distribution is. Maybe they need a $200,000 income. Okay, well then they're just going to go in here and incrementally increase that benefit until they get to a number that makes sense for them. Or it might purely just be something that they can afford. So we can never know that with a regular illustration. This system takes that kind of out of the equation and they start designing it on their own. Now, after the Estimate My Benefits, there's an entire area to talk about the financial obstacles that many of our clients are facing. Everything from not saving enough for retirement to where will taxes be in retirement. This is a conversation piece that the client will end up studying on their own, or you can utilize yourself through a Zoom meeting or a go-to meeting, going over why the benefits of Kaizen and what those obstacles are that they're facing. And then from there, there's a how it works video. So this video, it's about 2 minutes and 45 seconds. It explains the product, what the leverage, and how we minimize the risk associated with financing in general. Very, very informative. And then the client can go deep dive into how does this IUL actually work? How does the leverage work? All of it's animated, scripted, and written out in client-friendly language. And then, of course, minimizing risk, which we went over in that example. So this was designed, guys, for the client. So remember, yes, you will use this as a way to present, but this was written for a client to educate themselves on the program and ultimately make a buying decision. Now, whether they ask more questions of you, which I hope they do, but if they don't, they can go all the way down through the system and click the Start Online Enrollment. That will take them right into a live application where they can upload their driver's license, 1099 or W-2s for income verification. It will narrow down the right application that are needed for that client. It's about a 15-minute or so application process, at which when they're done, it uploads to you. You sign off on it with your agent report, and that gets submitted directly to the carrier. All communication is going to be between the carrier, ILIA, and then of course back nine and your case manager. So this system really allows you to start from an electronic invitation and end with an application and an approval, trust documents, and even payment, all done electronically without a single piece of paper needing to be signed. It's a huge, huge opportunity. So that's just a snapshot of ILIA. So where's the real opportunity? Well, we believe that there's a huge opportunity in the group markets, or if you have a list of existing clients that you want to upload and send like as a bulk invitation out to qualified customers. It is not a cold lead generator. That's not what this is, but it does allow you to utilize pre-existing lists and other marketing avenues to get clients invited to the system to experience ILIA outside of that traditional Apple illustration and of course PowerPoint presentation. So there's a lot of avenues that we're taking with this. We've got multiple drip campaign emails, an incredible landing page that ultimately I'd love to show you. But all of these things ultimately will come with joining Back9 as a preferred agent. So what I'd like to do is ultimately end there with Josh coming back on the line and talking about really that opportunity as a preferred agent, what you need to get started, and then giving you some more information and getting you access to ILIA as soon as possible. So Josh, I'm gonna give you the mic, and you can kind of close out this call, and we can answer some questions if there are any.
Perfect. Travis, as usual, phenomenal job. Hopefully everyone on the call here truly sees the value in this, and I 100% do. This is an absolute game changer. So we're really thankful for the relationship, the partnership, and also the preferred status now. So real quickly, if you're, for some reason, if you're not a member of Back9 Insurance at all, again, go into the chat box where you can go ahead and click the button and sign up for an account. If you are a member with Back9, you want to have access to the with Kaizen. There's two kind of levels here. There's being with Kaizen just to be able to offer this, and that there's an NDA that all your marketing managers have. So you can just ask the marketing manager for the NDA. You fill that out, sign it, get it back to us, and then we'll get you set up with the with your own login so you can have access to the Kaizen. We also have the ILIA option where if you want to take advantage of the ILIA software, which is truly amazing as well. And we have a second agreement that you sign, and then once you get set up, you can take full advantage of the whole ILIA software, which I'm excited about. It reminds you kind of quote and apply. So that's really exciting to be able to market this concept to your clients. So we're going to go ahead and open it up for questions now. I'm sure there's going to be some questions. We really appreciate everyone's time. Thank you for being on the call. Let's go ahead and open it up for questions. We'll get some of those answered, and then we'll go ahead and move forward. Thank you again. Questions are popping in here, so just give it one more second. Go ahead and ask your questions. So Travis, one of the questions was the upper age limit to the Kaizen plan. What's the upper age limit in?
65. So 18 to 65 are the ages. We typically don't go, anything over 65, the cost of insurance is a little too high. We can't exit in an early enough year to make this make sense. So 65 is our max limit.
Perfect. So someone asked, how do I move forward with the software? Reach out to your marketing manager. I think that the person asking this question, I'm the marketing manager, so I'll give you a call, Kim, and I'll get you set up here with the agreement. But reach out to your marketing manager. They all have the agreement that you need to sign at the NDA, and you can go ahead and get started here right away.
It's a good question, and I'll bring that up too. We're working on a time, Josh and I will work either a live webinar. As soon as we start getting those agreements back, we will put together a special webinar just for the people that decided to move forward. And we'll make it a very, very direct ILIA training to go over all the nuances, what to expect, some of the marketing materials we've created. That will be much more, I'll bring a lot more to the table on that webinar. So if you get that preferred selling agreement back to your marketing manager, we'll put together, again, a very special webinar just for those people that want access.
Thank you. What is the assumed average loan rate in your illustration?
Well, the loan rate's always going to start with whatever LIBOR plus 175 is, and then we get a projected 15-year LIBOR plus spread rate from our lenders. So we don't make that rate up. That's a rate that is coming from the lenders that we use, giving us what their projection is. So it's going to change quarterly based off of what current LIBOR plus spread is. So right now it's not going over about 3.5%, I don't think, throughout the next 15 years. If any of you guys have been listening to the news about the feds, they're not raising interest rates anytime soon. So a lot of our projections from our lenders are still in the high 2 and mid 3% range.
Perfect. Greatly appreciate that. A lot of people are asking about, getting signed up. Again, if you don't have an account at all with Back9 Insurance, you can go into the chat box there on the right side of your screen there, and you can sign up for an account. If you do have an account, just reach out to your marketing manager. I've emailed the agreement to all of them so they can send that right out to you to get set up with Kaizen here. Just a few more questions here. Go ahead.
Make sure let everyone know National Life Group / LSW and Allianz are both on the ELIA platform now. So depending on the carrier that you have affiliation with, both of those companies can be added to the system. So whatever carrier you're going to have contracted with Back9 those are the two that we can add to the platform.
Perfect. Here's a great question. Do I have to be variable licensed to sell this product? I can kind of answer this one. You do not have to be variable licensed. This is all done via indexing. So you do not have to have a variable license to offer Kaizen.
Correct.
All right, just a few more here. We'll wrap this thing up here. Let's see. Would a client that is younger than 40 but is making an annual income of 150 to 185, would they be a good candidate?
Perfect candidate.
All right.
They would so just FYI, guys, National Life Group does not have a net worth requirement. So they're only going to look at a net worth or of an annual income of $100,000 or more for 2 years. So they need a 1099 or W-2 of $100,000 of gross income to qualify for Kaizen. So that particular client you're talking about would absolutely qualify for National Life Group.
Here's a good question, Travis. Someone said if you go with one of the companies like National Life Group that has living benefits on there, how does that work with taking the claim out if something did happen? How would that work?
Ultimately, the loan would have to be paid back because the policy is in first collateral assignment to the lender. So they can either pay that lender back via a loan or withdraw from the contract or outside dollars to then turn on the living benefits. So the living benefits can only be accessed once the lender gets paid back. But remember, a lot of liquidity in these contracts. So if there is a critical illness or chronic illness prior to the lender getting paid back, there should be plenty of cash values to pay that lender back and then trigger your living benefit.
Perfect. Perfect. So here's if a parent would fund part or all of the first 5 payments, can the insured child income required be reduced?
99% of the time, no. You got to remember they've got an adult child, regardless of who's paying for it, has to be able to qualify for the insurance, right? So there's got to be enough annual income there to justify let's say a 7 or 8 or even $1 million death benefit, right, Josh? So, the carrier is going to have their own multiplier based off of their annual income to justify the death benefit. So that's the first hurdle. The carriers they want to make sure that the client can afford the premium. That's a big one. And if it's a gift, you're still going to have to justify the death benefit on the child. Of course, it has to be 18 or older.
Of course.
They don't want to have, they're really not interested in unemployed or students, because really you would have a very difficult time even getting insurance on a student that doesn't have a job. So you gotta, it's not a yes or no. I would need to know a little bit more about the client, a good cover letter explaining that this is a gift, maybe a future inheritance, that might justify a little bit more death benefit and a lack of income. But that would be something you could work with Josh and I and the team there to see what carrier would be more favorable and a good cover letter.
Perfect. Last question, we'll wrap this thing up here. Are you able to do a 1035 with these policies?
No, Kaizen, we do not allow 1035s into the program. There's multiple reasons why we don't. The biggest one is that the lender doesn't treat the 1035 as premium. So you can't, there's no matching on a 1035. So that's kind of a big one. And to coordinate 1035s with putting hundreds of policies in force at the same time, and Josh and probably Cindy there can attest, it's almost an impossible feat, because those are 1035s. There's conservation periods, there's all kinds of delays when it comes to 1035. So what we've seen is there's typically very few contracts for the people that qualify for Kaizen that have a lot of gain inside of an IUL or whole life policy. It takes 10, 15 years before that ever really happens, right? So Josh, what we usually recommend is find out how much is basis, how much is gain, if there's any taxable gain at all, and if there's not, it's quicker to surrender the contract and ultimately utilize some or all of those cash values to participate in some or all of those 5 premiums. So there, in many cases, it's rare that we see a lot of gain in these contracts that are being 1035. And again, the only reason you do a 1035 is to avoid the taxation on the transfer.
Of course. Perfect. Well, listen, Travis, you've been phenomenal as usual. Thank you, everyone, for being on the call. I know there's a lot more questions. Reach out to your marketing manager. They can answer those questions for you. We're looking forward to doing another one of these webinars. We can do a specific ILEA training for the people who are interested. And again, we're having success here already, so really excited to be a preferred vendor with you, Travis. We're looking forward to it.
Thanks, Josh. I'm looking forward to working with your team.
Everyone have a blessed day and be safe out there. Talk to you soon.
Thank you. Alrighty.